Good morning, students. Now we'll see the levy and collection of taxes. The most important aspect of goodwill in the valuation, if the departing chairman is the primary driver of the company's success, goodwill value may be 1 or 2 years worth of profit. Traditional backup period range from 3 to 5 years after purchase. If the super profit is high or the firm is very lucrative, extended amount of time may be required. Whether the firm is making super profit or just average earnings, goodwill might rise if there are several interested buyers. A company bottom line may be red ink at times, but even then, goodwill payment might be made if the company future seems bright. For an acquiring firm, it is not only about the money it makes after the merger, but also about the efficiency it gains. Now we'll see the valuation methods of goodwill. There are three types of valuation: average profit method, super profit method, capitalization method. In the average profit method, it is divided into two types: simple average and the weighted average. In the super profit method, the types are number of years purchase method and the annuity method. In the capitalization method, capitalization of average profit and the capitalization of super profit. The methods of share valuation is asset banking method, yield basis method, and the fair value method. Asset backing method, otherwise called as a asset basis method, instructive value method, real value basis method, or the breakup value method. The yield basis method is otherwise called market value method or earning capacity method. In the fair value method, it's called average value method. So the asset backing method, since the valuation is made on the basis of the asset on the company, it is known as asset basis or asset banking method. At the same time, the shares are valued on the basis of real internal value of the asset of the company, and that is why the method is also known as instructive value method or real value method. This method may be made as ongoing continuing concern basis. Second point, breakup value basis. In the case of the former, the utility of the asset is to be considering for the purpose of arriving at the value of the asset. This is the format for computation of net asset. The net assets are fixed asset, market value, investment, current asset, goodwill if any. We have to list the current liability, that is debentures, preference share capital, net asset funds available for equity shareholders. The instructive value of each share's formula is fund available for equity shareholder divided by the number of equity share. Alternative formula is net asset is equal to share capital plus reserves and surplus minus miscellaneous expenditure plus profit on revaluation minus loss on revaluation. Now we will see this problem. From the following balance sheet of Sweetex Limited, we are required to ask to ascertain the value of each equity share of the company. These are the liabilities and the asset. This is the question. So the solution formula is funds available for equity shareholder divided by the number of equity shares. So these are the net asset. The alternative formula also we are applying here. Equity share capital reserves less preliminary expenses, add profit on revaluation. So the answer is 3,54,000. In this net asset, goodwill, land and building, plant and machinery, investment, debtor, cash at bank, less current liability, sundry creditor, provision for taxation, other liability, and then less preference share capital is a 3,30,000. The formula of the instructing values fund available on the equity shareholders divided by total number of share, that is 3,30,000 divided by 20,000, that is 16.50. The next method is a yield basis method. Yield is the effective rate of return on investment which is invested by the investor. It is always expressed in the terms of percentage. So the formula for the yield method is normal profit divided by capital employed into 100. So there are two types of yield basis method, profit basis and the dividend basis. The profit basis, under this method, at first profit should be ascertained on the basis of past average profit. In the dividend basis, valuation of shares may be made on the basis of total amount of dividend on the basis of percentage or rate of dividend. In the fair value method, there are some accountants who do not prefer to use the intrinsic value or yield value, so they will calculate the fair value method. This is assignment question. Thank you.